this feeling of unease that seems pretty widespread across financial markets and, well, the global economy, really.
Yeah, it feels like the ground is shifting a bit, doesn't it?
It really does. Like the usual signposts, the things we look for, they're not giving clear signals anymore. So we want to explore what might be causing this uncertainty, especially thinking about, U.S. stocks and where the economy might be headed.
It's that sense that the old connections, the reliable indicators maybe, aren't quite as reliable now.
Exactly. That's what we're aiming to unpack for you today. Try to get a clearer picture without getting lost in too much jargon.
Well, a key thing seems to be this, maybe erosion of trust. Trust in the traditional mechanisms. Like you used to see the market react fairly predictably to, say, CPI numbers or jobs reports.
Right, there was a pattern.
And now,
yeah,
it feels much less dependable. It makes forecasting, well, pretty tricky based on just looking back.
The old playbook isn't quite cutting it.
No. And it's not just the economic data points either. We're seeing some really unusual movements between different asset types.
You mean how things are correlated?
Exactly. Think about long-term bonds and stocks. Normally, they kind of balance each other out, right?
Yeah, move in opposite ways.
But now, sometimes they're moving almost in lockstep. And gold's behaving almost like a tech stock sometimes.
Which is definitely not its usual role as a safe haven.
Not at all. And even the U.S. dollar, its traditional safe haven status seems, well, a bit shaky.
So for listeners, this means maybe those standard ways of balancing your investments, they might need a bit of a second look in this environment.
It certainly suggests that. It highlights how investors might be seeing risk and potential return differently now. And if you zoom out a bit, there's this tension, wouldn't you say, between this sort of economic story we expect and the political realities playing out.
Yeah, a disconnect. It definitely contributes to that feeling that maybe something's broken, or at least out of sync.
Right. Even if we can't put our finger on exactly what is broken, people sense something's off.
And some current conditions just feel unsustainable, like they can't go on forever like this.
Such as?
Well, rising yields for one, stalled or strained trade relationships, and, companies being really hesitant to give any clear future guidance.
That lack of forward guidance is a big one. It adds to the fog.
It all creates this sense of fragility, doesn't it?
It does. And that naturally leads to thinking about the impact, especially on the U.S. economy. It relies so heavily on the consumer, right? About 2/3 of it.
Absolutely. So if things get tighter, imagine 10-year Treasury yields hitting, say, 5%, mortgage rates over 8%.
And maybe a significant dip in the stock market on top of that.
Exactly. Consumer confidence could really take a hit.
And that could potentially slow down growth while inflation stays sticky. Stagflation territory, maybe, which hits everyone's wallet,
Directly impacts financial well-being, yeah.
Yeah.
We are seeing some maybe initial reactions, hints of trying to ease trade friction, some tentative talks.
There are signs that policymakers see the risks. Yes. They're not completely ignoring it.
But the path forward, still very unclear. And you can feel the market just hanging on any little piece of positive news, any sign of hope.
It's very sensitive right now. But, while specific political actions might contribute, the underlying issues might be more structural.
Meaning it's not just one person or one decision.
Probably not. The fact that the Fed, the Treasury, the White House, they all seem to be grappling with this, suggests the old playbook, their usual tools, just aren't working as effectively.
So the system's kind of searching for a new normal.
In a way, yeah. The market seems to be waiting for maybe a policy shift or perhaps a change in behavior to set a new direction, a new equilibrium.
So wrapping this up, the main takeaway for you, the listener, is this very real sense of uncertainty out there. Things aren't following the old scripts.
Yeah, those familiar patterns, the relationships between assets, between data and market moves.
Yeah.
They're less reliable. It makes things challenging.
Definitely challenging to understand and navigate.
Which brings us to a final thought for you to consider. Given this breakdown, this shift away from traditional trust and these, frankly, weird correlations we're seeing, what new things should we be looking at?
Like new indicators or frameworks.
Exactly. What might be more relevant now for figuring out where the U.S. and global economies are actually headed? Does this require us to fundamentally rethink some basic economic assumptions or how we approach investment strategy?
Something to definitely mull over.